Well, last week we were blessed with the highly anticipated Fed rate cut, the first of 2025. So, what are going to be the top three things that we need to look at this week that have the greatest potential to move those interest rates? What's going on, y'all? My name is Kevin Weedmark, aka the Mortgage Mouth, coming to you every Monday with another episode of the week ahead. I dive into the top three things that we can look at that have the greatest potential to move those markets so that we collectively can make great decisions on whether to ride the market or lock in those low interest rates. So let's just dive right in. And the first thing coming to us tomorrow, although we have several Fed members speaking this week, but the biggest one is going to be Fed Chairman Powell. Powell is going to be speaking again tomorrow. And after last week and his comments where he changed some of his rhetoric, indicating that the labor market was obviously a growing concern, inflation still remained very sticky, but they felt the necessity to move forward. Since then, we've gotten last Thursday, those initial jobless claims seem to drop a little bit. So it's going to be very interesting to see what his vernacular is. Does he remain very dedicated to the dual mandate? Does he indicate anything with regards to inflation? I think he's going to stay to the same messaging, but you can be certain that traders are hinging on anything he can say, any additional direction he could give, and does it change from any data that has been released since last week? That'll be, to me, the biggest market mover for the week. So we want to make sure that we pay attention to that. And what we're seeing today on Monday, we're seeing a lot of nothing. The market isn't doing a damn thing. Actually, I think the 10-year Treasury is as flat as it could be because it is going to be a very busy week. The second thing we have to look at is we have to look at inflation. Friday, we have the release of PCE. I've been talking about it constantly. And my main message now is 3% the new norm, right? The Fed keeps saying that it has this dual mandate. And of course it does. It needs to have good low unemployment. It needs to have good numbers for the labor market. And it has a target rate of inflation at 2%. But let's be honest. We haven't seen 2% in a long ass time. And frankly, with the way that they're kind of moving right now and the way the economy is moving and the fact that they just reduced that Fed funds rate, how are we going to get there? So my question is 3% the new norm? And if it is the new norm, what does that mean for long-term interest rates? And unfortunately, I'm here to tell you that if 3% is the new norm, we're sitting at where we should probably be for interest rates. They could tick a little bit lower. We could be looking in the mid fives, but hovering around the mid fives to the mid sixes, right in that range. I do not see it going anywhere unless we can get inflation under control. The Fed has spoken about 2 more rate cuts this year, but let's be honest, inflation could derail that. It could derail it in a second should it start to even move upwards by the littlest bit. So that is going to be a huge indicator on Friday. That is the second thing I think this week is the most important. It's going to close out the week. I expect a lot of volatility around that number because it is something that from a trader's perspective, again, always forward thinking, is going to paint the picture for what the Fed is going to do this coming up over these next couple meetings. The next one being October, the following being in December, where we're already anticipating rate cuts seem to be built into what the 10-year Treasury and where it's at right now with its yield. So we want to be really certain we pay attention to that number. And then the last thing we can look at, and let me just pull this up so we can see this, is we have PMI. And we're going to talk about that very briefly. But as you can see, tomorrow, expect some volatility, which is why nothing's really going on today. I get that new home sales is in there, and I see on Thursday, we see existing home sales. Let's be honest, the housing sector doesn't do a damn thing to 10-year treasuries. Nobody seems to care. I get it's relevant data as far as we're concerned, but the overall, I wouldn't worry about it. Durable good orders, it could be okay. GDP is a revision. Initial jobless claims could absolutely move the market. But with the highly anticipated information on Friday, I do not expect it to be anything drastic until we get to Friday. And tomorrow is going to be fireworks as well, bringing me to my third point. The third one is going to be your PMI. and that is purchasing managers indexes. You got it from the manufacturing side and the servicing side. And why is it such a big number? Because it's really basically, it's the mouth on the street. You're hearing it right from the horse's mouth. You're hearing it right from purchasing managers indicating increases or decreases. And is that something that could give the Fed some ammunition to maybe do something? I don't necessarily believe that, right? Because I think the big data sets of CPI, PCE from inflation, non-farm payrolls, those are the big numbers that actually make the Fed uh, um, think about what moves to make in the data set that matters. But these small things allow traders to try to interpret where the Fed mindset is going and where those critical points of data are going to end up in the future. Because the market, again, it's forward thinking. It wants to make sure it's ahead of the market because they do not want to be caught sitting in an unfavorable position where they lose a ton of money. So those are the top three things. Once again, we got the Fed chairman speaking tomorrow. I think that has high potential for some volatility. Absolutely can move the market. Definitely about 1/8% to 1/4% one way or the other. I think Friday has that same effect. So that is something to look for. And then tomorrow, obviously, we have those PMI. And as you can see, since last week, we had the interpretation of the Fed. Everything looked great. We then got those initial jobless claims numbers. And again, if the Fed is saying we need a lagging labor market in order to continue to make these moves because inflation is sticky, which is exactly what they said, with those initial jobless claims coming in lower than forecast last week, we can see that the 10-year Treasury is ticked up. It's now been in a sideways moving, a holding pattern. And I anticipate that unless we get some significant data on that initial jobless claims, we saw maybe tomorrow we see some struggling numbers indicating even further a worsening economy. Then we might be in a position to see those lower interest rates that we saw last week. All right, y'all. I hope you have a great week. Should you need anything out there, you have any questions, you want to develop a strategy of how to attack this market with the anticipation that rates will be lower over the course of 2026. You want to talk about buy downs. You want to talk about buying your rate down. You want to just simply talk about a refinancing strategy. Or if you're an agent, you have a question with regards to how should I market this house and what could we be talking about from a financial position? I'm your guy. Love to have a conversation. We can set up a Zoom and attack that. And then lastly, here is my information. Should anyone need that, you want to reach out to me directly, please don't hesitate to give me a call, shoot me an email. And as you can see, you can always jump on YouTube at The Mortgage Mouth. Make sure you hit that subscription button. Would love for you to follow and never miss a beat. All right, y'all, have a great week. I'll be coming to you every day with an episode of the Daily Dose. So make sure you do check out that YouTube channel because you never want to miss a beat. A very quick 3 minutes of what happened that day, how it affected interest rates, and what we can anticipate for the next day. And of course, we always have that Friday wrap up. I'm here for you to help make sure that you have that awesome strategy in place that's going to save you time, save you money, over the period of that loan because it's built on strategy. All right, y'all, have a great week. Cheers.